Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, shutdown avoided as Congress passed its funding bill. This is a highlight. However, it has to be said that US stocks are edging lower, even though the shutdown has been averted. Investors eyeing Fed comments, jobs, and also a huge amount of data coming out this week. We'll have Tasty's Josh Fabian live from Chicago in just a minute for more on that. And oil is steady as the focus amid an OPEC Plus meeting returns to the supply outlook. Well, good afternoon. I'm Angeline Ong and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, this is how equity markets are looking, and they are ticking lower, showing you this chart here, which is giving you an hourly view. As you can see there, they were just marginally higher just about moments ago. However, they are now ticking lower. Similar story for the Tech 100 as well, as you can see there on the hourly chart. And also the US 500 on our platform, giving you a mirrored effect after the news that the government shutdown had been averted. Perhaps investors are looking more towards the jobs number out this week. We've also got the JOLTS and not forgetting mixed data coming out of China could perhaps be keeping investors cautious as well. In terms of mega cap stocks, we're watching the Apples, the Meta, Microsoft, Amazon for you because they were rising slightly earlier, but they have recently just changed direction slightly, as you can see there. This is the hourly view. Meta, of course, is an all-session stock, and it's just tick lower, similar to the major indices. What's perhaps more interesting is the volatility index, because of late, volatility has been ticking higher. And no surprise, really, given so much that's been going on, that has increased a bit of caution amongst investors around the world. Now, back to one of our top stories. Congress passed a stopgap funding bill over the weekend with overwhelming Democratic support after Republican House Speaker Kevin McCarthy backed down from an earlier demand by his party's hardliners for a partisan bill. Investors, as I mentioned, also brace for quite a few comments out later. Jerome Powell speaking, along with Philadelphia Fed President Patrick Hasker as well. This is at a roundtable discussion with local employers and small business owners to discuss the efforts to grow the local economy. And that's not all. Later in the session, we have Cleveland Fed President Loretta Mester speaking about the outlook for the U.S. economy. Central banks also due to decide on rates this week, starting tomorrow with the RBA. The market sees no change and the cash rate should remain at 4.1%. That said, a recent uptick in inflation meant that some economists believe that another rate hike could happen before the end of the year. This meeting is the first under new RBA Governor Michelle Bullock, and also a hike in the first meeting is very unlikely if history is anything to go by. And as that uptick in inflation was largely caused by a rise in oil prices, the RBA can easily overlook a temporary spike, but will have to react soon enough if high prices in oil persist before these then spread throughout the Australian economy in the form of higher inflation. The RBNZ also expected to stay put at 5.5%, inflation still decelerating in the country, and the official position is that rate rises have yet to be transmitted to the broader economy there. As I mentioned earlier, US employment data is going to keep investors on their toes throughout the week. We've got the JOLTS that will be released in the next session, and it's expected to remain broadly unchanged on last month when they fell to their lowest level since May 2021. Then on Wednesday, look out for the ADP. It's expected to slow a third straight month. 160,000 job creations in the private sector are forecast after 177,000 in August. And on Friday, this is the key one to look out for, the non-farm payrolls. There too, job creations forecast to slow ever so slightly, but it has to be said the US jobs market still confounding those that expected a slowdown early on in the year. Expectations are for 163,000 jobs added to the US economy. Looking at all these forecasts, economists believe that the labour market is now perhaps wavering slightly, and that the Fed tightening policy is doing its work. However, the Fed has signalled that it's not yet done with rates, so it could further tighten once more before the end of the year. Now, the dollar, of course, amid all this, might be one to look out for. Let's check in with Josh Fabian, all the way from Chicago. He's with Tasty Live for us. Josh, thank you so much for joining us. Where do you see the volatility out of the US this week?
Oh, first of all, thank you for having me. You mentioned it earlier. We've got a couple of big economic numbers coming out, especially at the end of the week with the employment report. We're looking at 163,000 new jobs created, along with an unemployment rate of 3.7%. So, you have the JOLTS number tomorrow. You have Fed governors. You have Fed Chairman Powell speaking tomorrow. So there's a lot of stuff for the market to digest this week. But I really think the key is going to be the jobs number on Friday.
Oil also one that's really fascinating, and there are concerns here that we could soon see $100 barrel oil. Are you getting this sort of mood music stateside?
Well, oil is the one thing that is most concerning from an inflationary perspective. We're well above $90. We've been there for a while, or for at least the last week now. So that's one that we're watching and is certainly of concern. If that gets closer to $100, I do think you're going to start to see more market volatility because of that.
Thanks very much, Josh. We'll be checking back with you, I'm sure. Josh Fabian there, trading analyst at Tasty Live, part of IG Group. Now, speaking of oil, it's also OPEC Plus that's meeting, that's putting a spotlight on oil prices. IG's Axel Rudolph has taken a closer look at the technicals at where WTI is headed.
Yes, oil is indeed really interesting ahead of the OPEC meeting on Wednesday. And if we look at WTI, we can see from a technical perspective something very interesting appearing here as well. And that is called negative divergence. So what we're seeing here is basically last week's high at $94.25 per barrel not being confirmed by a higher reading of the relative strength index. So basically on the WTI chart, we have a higher high compared to the previous week's high, but on the relative strength index, the RSI at the bottom of this chart, you don't have that. What you're actually seeing here is very clearly a lower high. And when that happens, it's called a negative divergence, and it warns market players that there might be a potential reversal in the trend, or at least a consolidation against the previous trend, which in this case, with regards to the oil price, has been to the upside because we've risen by over 15% or so since the end of August with regards to the oil price. So what I would expect to see here is a retest of the August to October uptrend line around $89.56. And then the question is, will we be able to hold above the last reaction low? And a reaction low is simply a low which is lower than the one to the left and to the right on the daily candlestick chart here. And that was made on the 26th of September at $87.85. So basically what I'm saying is, provided we stay above $87.85 on a daily chart closing basis, this is just a consolidation in a strong uptrend, and we could perhaps even be heading higher again towards the $100 mark or so. But if we were to fall this week through $87.85 and close below that mark on a daily chart closing basis, then we could see a more pronounced correction take us down again towards the early August high at $84.39. So watch this space from a technical perspective. It could be very interesting indeed.
Thanks very much, Axel. Of course, we're also watching to see whether or not Saudi Arabia could start to ease its additional voluntary supply cut of 1 million barrels per day. This is according to our analysts. Note also what's key, just looking at the chart here, as Axel was talking about WTI, we have seen quite a return to sort of levels unseen since around September 29th. But if you look at a wider view, we've seen oil prices really climb since around the August period, and hitting this peak here at around 9,400 before coming back down again. It really depends on the comments that come out of OPEC Plus. The OPEC secretary has said the group still sees oil demand as quite resilient this year as it was last year. So the comments more important than what they actually do. Now, before we go, let's have a last look at how the market is looking. We're now minutes away from the open. Taking a look at Dow Industrials here, as I mentioned earlier, they've just ticked lower in the last few hours. A similar picture on the Tech 100 as well. This is despite the shutdown being averted, and perhaps a lot of caution ahead of the jobs number on Friday. Until then, that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.